So what is this infinite banking whole life insurance thing? What does that really mean? And how does it really work? That's what we're gonna talk about in this video right now. Okay, so you might be going down this little rabbit hole of this infinite banking concept or infinite banking whole life insurance. And you're not even sure what is it. Like, what is this infinite banking whole life insurance? How am I using this? How is it supposed to be used? Does it actually work or does it not work? Is it a big ripoff? Is it just a scam for people to sell me more insurance? The answer is yes to all the above. It can be, but it also could be one of the coolest strategies if you know how to use it. I'm going to talk about how I've used it for myself to grow my wealth faster. So be sure to hang in to the end. All right, so what is this infinite banking whole life insurance thing, right? Because most people, when they think about life insurance, they think of death insurance. They think, I buy this term insurance policy that'll cover me for the next 10, 20, 30 years. It's dirt cheap, but the only way I get paid is if I die. And even then, I really don't get paid because somebody else gets paid. So really, I'm not getting anything from this sucker, except maybe protecting my family, right? That's true. That's what term life insurance is. But whole life insurance, that's a different thing. That's something that actually covers you your whole life, but it doesn't just have a death benefit, but it also has this tax-free savings account inside of it called cash value. Now, I first learned about this as a financial advisor, actually after I quit being a financial advisor. For 4 years, I'd heard about whole life insurance, but I'd heard about the traditional whole life that most people rip on online, which I agree with. Most whole life sucks, okay? It pays very little, especially if you have to pay all this to cost up front. Well, after I quit being a financial advisor, I started getting into real estate investing. All these real estate investors were raving about this infinite banking concept. So I got the book by Nelson Nash called Becoming Your Own Banker. I read it, I drank the Kool-Aid. I even went to one of my friends who sold it that they all recommended, and I bought it from him. And I remember looking at it saying, man, this is really expensive. Is this what I should be doing? He's like, hey, this is the thing. Like, this is how it works. I said, okay, I'll do it. So I bought that traditional whole life plan. Now that was in 2006. Just 2 years later, we're in the depths of the recession. I'm in the hole $16,000 a month. I can't keep paying my $1,000 a month premiums on these things. And so I had to let it go because there was no cash in that cash value. It was all paying for death benefit up front. Now I thought that's just what it had to be because that's what I was taught. I wasn't shown something that could be better. Well, I find out later on, it could have been designed better where it could have been cheaper for me. Where not instead of just paying $1,000 a month and have to wait like into the third year before I finally have a little bit of cash going in that tax-free savings account, I could have had money in there from day one, from month one, but he didn't show me that method. And when I argued with him about it, show him all the reasons why he should have done it that way and even how I could beat his numbers, even long-term, because there's a lot of people out there trying to tell you, well, it's got to be designed this particular way to have long-term growth. Well, guess what? I still beat all those people anyways, because you have less costs coming out, meaning there's more cash to grow inside of it. I showed him that. He says, Chris, I designed it that way because I couldn't afford to cut my commissions. Guys, he prioritized him and his own family over his own client who he had a real obligation to serve and protect. And he didn't do that for me and my family. So as a result, we didn't have that life insurance anymore. I had to go buy cheap term insurance to make sure I was still protecting my family. And so I thought whole life was a ripoff until I found out it could have been done better. So just understand that not all infinite banking is created equal, and we'll talk about that a little bit here. But there's a lot more you can do with it. There's a lot of ways to design this to make it better for you and your family and for creating wealth right now. And so the best tool, the best vehicle to use if you're going to do infinite banking is whole life insurance. Not the traditional one like I mentioned, right, where it's just all going to fees, but there's ways to alter the whole life to have like different riders, things like term riders and whatnot, to allow you to get more money in with less cost. Just so you're aware, the ability to be able to pay into these plans are all based on the death benefit. The higher the death benefit, the more you can pay into these plans. The lower the death benefit, the less that you can be able to pay and contribute into these plans. We always try to go for what's the lowest death benefit needed to allow the maximum amount of cash to go in, therefore maximizing the cost savings on that plan. Now, there will be a lot of people lately telling you that you should be using things like universal life. Index universal life has become very, very popular. They're saying this is what you use. There's even guys, I wouldn't mention their names, initials like DA, for example, doing stuff out there that say, you should go and do it this way with universal life, and this is even like infinite banking. It is not. Rule number one, infinite banking, the infinite banking concept, here's what it actually is, guys, is that Nelson Nash, who of course I'm going to give all credit to for helping really making this popular, right? Nelson Nash talked about how you're able to utilize the cash from the insurance company because your cash in that savings account, that tax-free savings account, can be used as collateral. Why? Because they're paying you a guaranteed of at least 3 or 4% a year. So as a result, they have no problem giving you a loan on that money up to about 90 or 95% of whatever's in there, because they know that it's guaranteed to always grow. That's the nice thing about whole life insurance. It is always guaranteed to grow. It can never, ever lose money. The only time you can lose money is if you pull the money out of it. And then especially if you borrow all the money out and then don't pay anything towards interest, then maybe it might start losing some money. But it is guaranteed to always grow the cash value. Well, as a result, that's why they're willing to give you loans. Indexed universal life isn't the same. One is, for example, see, when I do that with whole life, right? If I say I borrow from the life insurance company, I'm borrowing and I am paying them back interest, but I'm using it to go and invest. It could be in my business, it could be buying real estate properties, it could be doing all kinds of investments, right? But I take the cash flow from those investments or the profits from my business, I take that and use it to start paying down the line of credit. So yes, I'm paying interest to the insurance company, but as I pay the loan balance down, just like when you pay down on a car loan or something like that, you start to see less and less goes to interest, more and more pays principal. Not because the interest rate changed, but because as you pay the loan balance down, you're paying less and less in interest, right? It's just math. And so you do the same thing here. But the cool thing is this, is because as you're paying down that loan balance, the money over here, you never pulled it out. You still have all that money in there. So even if I had $100,000 in there and I want to borrow $50,000, say to go invest in something, that's paying me $5,000 a year. Well, I'm taking that $5,000 a year to pay down that $50,000, but that $100,000 is still in there growing compounding tax-free interest without skipping a beat, right? So I'm compounding interest while I'm paying less and less interest there while they're paying me more and more. Therefore, I'm able to make money here, I'm able to make more net interest over here, and also make money in the investment over there. I make money in two places at once. This is way better than draining my savings account, making no money in my savings account, and then putting there. It's almost like I can still keep my money in my savings account and I can still invest it and get paid in both places at once. That's what you can actually do. But with universal life, especially index universal life, with the exception about 5% of the time, you do not double dip, as I call it, where you can make money in two places at once. When you borrow from a universal life, and by the way, I actually started selling universal life back when I was a financial advisor. So this was like 20 years ago. I did equity indexed universal life before it was even popular. And I remember when I would borrow from those policies, they called what was at best a wash loan. That means it's like a net 0% loan. They're like, yeah, we'll credit you money back so that your loan is like 0%. Well, that's great, but it doesn't mean my money's compounding. It just means that I'm not getting charged interest, but it's not growing either. So that double dip does not happen with most indexed universal life. And even if it does happen, usually they got some different terms and things in place and other costs that actually really make it not that great. Plus, here's the other danger of universal life, is that expenses and costs in that policy goes up every single year, because every year you get older, it gets more and more expensive because you're more likely to die each year. So as a result, it's not necessarily the best thing to have. So just be aware, universal life is not doing infinite banking. And even Nelson Nash, I know people have even asked him before he passed away a few years ago, they said, can you use universal life for infinite banking? And he said no. So if even the godfather, the grandfather even of infinite banking says, no, that does not count, this is also the case. I know everybody will want to argue it because there are people out there that say, hey, the stock market's great. But that's the problem, guys. By the way, stock market, what if it doesn't return well? What if you end up making less money? Guys, there are so many cases where universal life could run out of money by the time you get into your 60s, 70s, or 80s. With whole life, it's always guaranteed to keep growing. Now, I mean, I have other videos on this, of course. I talk about like ways that they'll talk about using buying cars, buying houses. Guys, I don't do that because if I can get just the same interest rate or a lower interest rate with a bank, I'm going to use the bank's money, especially because it's not my money, use their money to go buy those kind of things, especially low interest loans like cars, houses, student loans even. I would much rather use the bank for that. And then for my money, if I have to pay interest back to the insurance company, I want to make sure I'm making more than what it cost me. And so that's why I go and invest with it. That's why I use it in businesses and I use it for real estate and things like that. I don't go use it in the stock market. That's gambling. I don't go buy crypto with it. That's also gambling, right? I want to put in things that get me money, that pay me money, especially on a regular basis. I love cash flowing investments if I'm going to use my policy for that. So don't for 1 minute believe you should be going buying cars, houses, and all this kind of stuff and being debt free when really you're just creating a different kind of debt with the insurance company. Yes, it's better in some ways, but it's not as good as they say it is. It's much better if you're using it to grow your wealth versus just to try to save on not paying a bank, which really you're just paying the insurance company, which acts as the bank. So be aware of that. Many people teach you that those kind of strategies. That is not true. Also, here's another bonus. Do not use this as a bill pay account. If you try to use it as a bill pay account, that can also be a dangerous thing. One, insurance companies don't like it. And two, it's not worth all the work and effort. All right, so as I mentioned, I love to use this to be able to create and grow more wealth. If you want to learn how to do that more, I recommend going to moneyripples.com, go click on Infinite Banking, learn how you can go down this rabbit hole a little bit more to see how this really, truly works. Go visit moneyripples.com right now.